Welcome back to the Dinar Daily channel. Today we're diving deep into a fundamental shift happening in Iraq's economy, a transformation that goes far beyond the daily headlines and speculation. This isn't about fleeting rumors of currency revaluation, but about the structural, long-term reforms that are quietly reshaping the nation's financial landscape. We're talking about a move by the Central Bank of Iraq, CBI, to mandate electronic payments for all state institutions. A decision that's been called a watershed moment for a country historically dependent on cash-heavy transactions. This policy isn't just about convenience. It's a strategic maneuver to build a more accountable, transparent, and stable economic future. The government's new directive requires public institutions to abandon physical cash in favor of digital systems. This is a monumental step for Iraq, a country where a significant portion of its economy has operated in the shadows, outside the formal banking system. By enforcing this mandate, the CBI is laying the groundwork for greater traceability of money, which in turn can lead to more effective management of liquidity and a significant reduction in corruption. This initiative is designed to create a financial infrastructure that can support long-term economic growth and instill greater confidence among international investors. For years, a major challenge for Iraq has been its low rate of financial inclusion. Millions of citizens have been excluded from regulated financial services, relying instead on physical currency and informal money transfer networks. This lack of oversight has historically limited the government's ability to implement effective fiscal and monetary policies. It has also created fertile ground for smuggling, black market transactions, and price instability, all of which have undermined the stability of the Iraqi dinar. The mandate for electronic payments is designed to bring these millions of citizens into the regulated economy for the very first time. This transition is an essential precondition for Iraq to reintegrate into the global financial system. Economists and analysts have long argued that a country's currency cannot achieve lasting stability without transparent financial flows. By enforcing electronic systems, the Central Bank of Iraq gains crucial visibility over money supply and circulation, limiting the opportunities for manipulation and strengthening its ability to defend the official exchange rate. This process is not a switch that will trigger an immediate revaluation, but rather an integral part of the preparatory work necessary for any future currency adjustments to be credible and sustainable. The new policy also directly addresses the issue of shadow markets, which have historically undermined Iraq's official exchange rate. By digitizing payments and strengthening compliance, the government is actively working to reduce these economic distortions. This push for transparency is already showing tangible results, as official reports indicate that Iraq's inflation has fallen sharply from 7.5% in early 2023 to less than 3% today. Such progress gives both domestic and international observers concrete proof that these reforms are more than just temporary experiments. They are permanent fixtures aimed at building a sound financial foundation. To ensure the success of this monumental undertaking, the Iraqi government is mobilizing its resources across multiple sectors. Private banks and technology providers are working in concert to make sure that citizens and businesses have the necessary access to and confidence in these new electronic payment systems. This widespread mobilization is critical for a reform of this scale to be successful. The goal is to build a robust and reliable digital ecosystem that can support the entire economy, from daily commerce to large-scale government transactions. One of the most compelling examples of this digital modernization is the integration of artificial intelligence into customs management. Traditional customs systems at Iraq's ports and borders have been notoriously inefficient and vulnerable to human error and corruption. By deploying AI-driven technologies, such as automated cargo inspection, the government is drastically reducing opportunities for illicit activities and accelerating clearance times. This strategic use of technology ensures that customs data is directly linked to electronic payment platforms, ensuring that fees and taxes are collected transparently and flow directly into government accounts. This improvement in customs management is already yielding remarkable results. Reports indicate a significant increase of 150% in revenue collection at border points, a rise that analysts attribute directly to the enhanced digital oversight and reduced smuggling. For international investors, this kind of improved fiscal is a powerful signal. It shows that Iraq is developing better state capacity to manage its public finances transparently, reducing the country's risk profile and making it a far more attractive destination for foreign capital. The Central Bank of Iraq has been vocal about its long-term vision, which includes a move toward a managed float system for the Iraqi dinar. A managed float is a system where the central bank can strategically intervene in the market to limit extreme volatility, unlike a free-floating currency that can swing wildly with speculation. This approach is a measured and practical step for a country with a steadily improving but still fragile economy. The managed float would provide the CBI with the necessary tools to maintain stability while signaling a gradual liberalization of its currency to the international community. For those holding Iraqi dinar abroad, this is a critical signal that any future adjustments in value will be carefully monitored and supervised, rather than left to abrupt, unchecked shifts that could destabilize the market. This measured strategy demonstrates Iraq's commitment to building credibility with investors. Before pursuing more ambitious currency moves, it signifies that the country is prioritizing stability and a controlled transition over sudden, speculative windfalls, which ultimately benefits the long-term health of the currency. The reform trajectory in Iraq mirrors the path taken by other emerging economies that successfully modernized their financial systems. A prime example is Vietnam, which undertook a similar digital transformation before the Vietnamese dong gained greater regional credibility. This included the widespread adoption of electronic banking, government incentives for digital payments, and strict enforcement of anti-cash policies. Iraq is now following this blueprint by mandating that customs revenues and state transactions flow through electronic channels, which not only modernizes its domestic system but also prepares it for international integration. This strategic alignment is directly linked to Iraq's bid to join the World Trade Organization, WTO. The Ministry of Commerce has already completed 7 key technical files required for accession, covering critical areas such as customs valuation and trade barrier assessments. WTO membership is a significant goal that would not only attract new foreign investment but also enable Iraq to diversify its exports beyond oil, which is a vital step for long-term economic resilience. Analysts believe Iraq is deliberately synchronizing its WTO accession timeline with its financial sector reforms to ensure the country has the institutional and technological infrastructure to meet global standards beyond the high-level policy changes. The digital payment revolution is fundamentally changing daily life in Iraq. Business owners in major cities like Baghdad are reporting smoother and faster transactions, and customers are increasingly choosing to pay with bank cards and mobile applications instead of cash. This represents a profound cultural and generational shift in how Iraqis perceive and interact with money. It shows that the modernization effort is not just a top-down mandate but is being reinforced by consumer behavior and grassroots adoption. To encourage this cultural shift, nationwide public awareness campaigns are being launched through various channels, including television, radio, and even mosque announcements. While urban centers have adapted quickly, the transition presents a challenge for rural regions with weaker internet infrastructure and limited banking access. However, the momentum is undeniable, and each new user of digital payments contributes to a stronger, more transparent formal economy. This silent but steady transformation is creating the essential foundation upon which any credible future currency adjustments could be built without destabilizing the broader economy. The economic data coming out of Iraq provides further evidence of this progress. As of September 2025, the official exchange rate for the Iraqi dinar is approximately 1,110 IQD per US dollar. What is particularly noteworthy is the narrowing gap between this official rate and the black market exchange rates. This convergence is a crucial milestone because it indicates a stronger state control over the financial system, reduced leakage, and a gradual buildup of investor confidence. Historically, parallel markets have undermined official policy, so closing this gap is a powerful signal of a more trustworthy and stable valuation system. When we look at the dinar's performance in comparison to other emerging economies, the picture becomes even clearer. Vietnam's dong, for example, is holding steady at around 24,400 VND per USD, reflecting a stable currency backed by strong trade and disciplined monetary policy. In contrast, the Zimbabwean dollar continues to struggle with extreme volatility, with informal market rates diverging widely from official benchmarks. This comparison highlights Iraq's unique position. It is demonstrating steady, structural progress that is positioning its currency for long-term stability and credibility in a way that other nations have not. The commitment to meeting international anti-money laundering (AML) standards is another driving force behind these reforms. The move to electronic payments directly limits illicit flows, including smuggling and corruption, which is a key requirement for any country hoping to deepen its ties with global institutions, like the IMF or secured WTO accession. This focus on international compliance shows that Iraq's financial modernization isn't just about domestic economic improvement. It's about building the kind of global credibility and trustworthiness that are essential for the dinar to be respected. In international markets, this multifaceted approach, combining legal mandates, technological innovation, and public awareness campaigns, shows that Iraq is thinking about its financial future in a holistic and strategic way. The country is not looking for a quick fix or a sudden economic shock. Instead, it is engaged in a marathon of fundamental reforms designed to create a resilient and transparent financial system. For investors who understand this long-term perspective, these changes are not just another headline. They are significant milestones that show the country is on a deliberate path towards structural credibility. In essence, Iraq is preparing its financial environment so that when the time comes for any future exchange rate adjustments, those changes can be sustained, credible, and internationally recognized. The central bank is laying the essential groundwork, which matters far more than rumors of a sudden windfall. This preparation demonstrates a level of seriousness and foresight that is exactly what serious currency investors look for. It's a signal that Iraq is moving away from being an isolated, cash-based economy and is preparing to be an emerging and respected participant in global markets. Ultimately, the credibility of the dinar will not come from political promises alone. It will be a direct result of the concrete systems and legal frameworks being put in place to ensure transparency, compliance, and efficiency. Iraq's strategic embrace of digital technologies, from electronic payments to AI-driven customs, is a clear step toward making its economy and, by extension, its currency globally trustworthy. The journey is long and complex, but the direction of these reforms is unmistakably toward building a stable and predictable financial future. These structural improvements are vital because they create a robust foundation that can withstand future economic pressures and global shifts. The World Bank and IMF have consistently stressed the importance of these reforms for Iraq's financial stability. By actively addressing the issues of financial exclusion and unmonitored money supply, Iraq is not only building a stronger domestic economy but also creating a more reliable environment for foreign investment. This systematic approach is what truly matters for the long-term prospects of the Iraqi dinar. The current economic landscape in Iraq, with falling inflation and a narrowing black market gap, is a testament to the tangible results of these reforms. While there are still challenges to overcome, such as internet infrastructure in rural areas, the momentum behind this digital revolution is undeniable. The government, central bank, private sector, and even ordinary citizens are all contributing to this transformation. This collective effort is what gives these reforms their power and permanence, showing that the country is genuinely committed to building a modern financial system for international investors. This grassroots adoption of digital payments is just as significant as the legislative reforms. It indicates that the changes are not simply mandates from the top, but are being reinforced by consumer behavior on the ground. This bottom-up support creates a self-reinforcing cycle of modernization that makes it nearly impossible to reverse. It shows that Iraq is developing a financial culture that values transparency, efficiency, and accountability, which are the cornerstones of a credible and stable currency. In the end, what we are witnessing in Iraq is a fundamental repositioning of its economy. It's a strategic effort to shed its legacy as a cash-heavy, informal market and to embrace a digital, transparent, and globally compliant future. This transformation is designed to build the necessary credibility for the dinar to be seen as a reliable currency by the international community. It is a long-term play that prioritizes structural integrity over short-term speculation, providing a clear path forward for the country's economic integration into the global financial order.